Okay, this is WHN. This is the weekly chart. I've just, as you can see, it's been in a little bit of a downtrend. I'll just put a it looks like it's starting to move sideways out of that at the moment, so I'll just get rid of that for now. And it's formed a little bit of a basing pattern here, but it's held for a while now, so that's probably a good sign, because it's the longer it spends sideways, the more accumulation, more time it's had to accumulation, and the bigger the investment being made in the stock, and that means that when it wants to move up, it can move up. But I'll just zero in here on this latest what's been happening here of late. You see this really high volume up bar that I've marked off, and then the next bar has come down really hard on volume, and then it's come right off down to here. So so that will act as an area of resistance that we need to break through. We'll just see what it's done. It's come off. Then it's tried to hold their support there on the selling's abated, and then it's come down, and we've got volume kicking here again, and I think that's a mark below of that bar there. A mark below of that bar. It's kicked back up there and held the bottom at 3 cents, and then it's then at 3.6 was the next one, which is the bottom of this high volume down bar here. So volume's kicked in, and smart money normally sell on up bars, and there's certainly supply there, but we've got resistance there, so we'll be getting supply from trapped holders to the left here. And the next bar closes higher, so it looks like they're absorbing. They've been trying to absorb that supply to the left, because the price hasn't come down. Like over here, when you had that really high volume up bar, it knocked the price back to, it lost over 50% of its value very quickly. But now the volume's kicked in, and it's just the lows are being supported. It's getting higher. That looks like a test there. If I zoom in on there, that's a test. That looks like a bit of a no demand, except I think it's because it's low supply there. That's what's allowed that to go up. And then they've pushed through the resistance on increasing volume. So that's actually quite, I think that's okay. Because it's not excessive, it's what you need to break out. You've got these little resistance lines up here from the top of these bars. So they might test that breakout level there. That's a good little breakout there. So they might test that again on light volume. So if you see these really light volume bars coming back down on there, that'd probably be a good place to enter. And you've got your target there at 5 cents. We might just go to the daily on that one. And there's a downtrend channel there that's broken. And it's formed a little uptrending channel. There's a nice little test there, and that's testing probably this little breakout up here. Really low volume, really narrow spread, nice test. And bang, that's the response, which is a weak bar, and knocked it back. So, but I think they're trying to absorb. Looks like. What have we got here? This is the real high volume bar at the top there. So if I just mark the bottom of that bar, well, I mark the bottom of the top of this bar first. So it's gone up to the top of the channel, got knocked back, but they've supported it. See, the supply is now really low. They've supported it. It's gone up and up thrust. And that's formed a bit of a resistance there, that the close of that bar. but they've supported the lows. Lows here have been supported for the most part, and it's got up over it. That's a weak bar as it tries to get through, but they're absorbing supply because the lows are still getting higher, so they're obviously absorbing trapped holders. It's a bit hard with these non-liquid stocks because you get very weak bars in them, but you will get them if they're trying to absorb supply as well. It's just the nature of a liquid stock. But if you can see, so it's pushed through here, and I think that's actually, that's okay. So it's broken out on good volume. It's not excessive. That's not excessive volume. That's what you need for a breakout. It's broken through the top of this high volume bar. It's also broken through the top of this one here at 4 cents. Zoom in again. Oop. That's really light volume. Up thrust, no demand. And then the next one comes down. It's a down bar on really low volume. So that's actually very good because it's that's a test. That's testing that volume there, but it's also testing this breakout line here. So that could actually run again tomorrow. The only thing I've got against it is it's at the top of a trend channel, so it's a bit vulnerable being at the top of a trend channel, and they may actually want to bring it down to test this high volume bar here that's been in the most recent past. So you might get but it's not weak, it's not being sold off, because that's not excessive volume. That's what you need for a breakout. So it's broken out after absorbing supply, broken out, tested on low volume. They may want to test between the 3.8 and 3.6, but they may not. We'll just have to see. But there's nothing weak about that at all, and I think it will run to 5 cents when it wants to run, and which I expect that would probably be soon. If it was to come back and test the top of this bar, that'd be the 3.8. That would be the middle of your trend channel there, so that could happen. Anything like this really low, really narrow spread down bar with really light volume there, like that, and you could buy one of those if they've turned up here on the chart now. But it's up to you whether you want to buy that. That's low supply. That's a low supply test, or if you want to wait for confirmation. It's just sometimes a confirmation on these penny stocks is boom, is the move. A good confirmation is you get low supply and then you get price going up and slightly more volume. There's a good test, and then the confirmation where it's gone up in slightly non-excessive volume, and you could have taken an entry there. You get other ones there. You got one there, light supply, gone up again, got moved up above it, and slightly more volume. Except it's got a long tail in it at the top, but I think that's because it's in a liquid stock, so it's a bit hard to and they're a bit more erratic. But that's really a test and confirmation you could have got in there. There's another one, test, really narrow spread down bars, confirmation you could have got in there. So that's what sort of thing you're looking for, the test and then the confirmation. But sometimes you don't get them. See, that's a real good test, and bang, up she goes straight away. So I think that's up to you whether you take an entry there. But I think at the top of a trend channel, it's a bit risky. But I think it's heading for that 5 cents, to challenge that 5 cents for the short term anyway. And that could happen next week even, because that looks like they're making a bit of a move on there, because I've tested the bottom of that bar now, and on top of that bar is 5 cents. I think that's where it's going. Let's have a look I'll just have a look at the weekly again. On the weekly, for a really good long-term entry, you want it to get away above your climactic value, this really high volume bar. If they break out above that, they'll test it, because they're not going to, they most probably will test it. And if you saw these really light narrow spread bars come back and test, you could go long and get your entry in. See, there's a test. Oh no, that's not a test. There's a test. Didn't confirm, but it's a very low supply down by. If you see one of those on top of that, once it's broken through, then you're looking at your next resistance line is the top of this one here, 7 cents, 10 cents, 12 cents, and then there's really 18 cents. Yeah, so that's the 5 cents is the price to beat. If they're done accumulating, they'll take it over there and test. If they're not done accumulating, they'll probably take it up to there and then bring it back down for more accumulation. But in the short term, I think you've got, what's it at, 3.8 or 4 cents roughly, 4.1 cents. In the short term, you've got a 5 cent target anyway. I think it'll definitely get there in the next couple of weeks. It could get there tomorrow even, who knows. Penny stocks can be a little bit erratic, but there's nothing weak in the chart from a volume spread analysis point of view. There's nothing weak in the chart about this stock at all. So yeah, it's a good one. Okay, this one is VRX. It's had a bit of a breakout, it looks like. Understatement. Look at that volume. That's just insane, isn't it? It's just going up. That's all the data I've got. So you're in fresh new territory now, and there's probably not a lot I can say about that. Well, there probably is. There's nowhere there where you have a long entry. I mean, you can chase the price, but it's deadly because when you've got that sort of volume, I'll just get out of here. There's obviously been some, I mean, it's gone from 22 cents to 60 cents in 1, 2, 3, 4, 5 days in a week. And you can see a high volume going up. They've tested it, pushed through, and the last bar is a no demand bar, but that's because it's the lowest bar in 3 bars, but it's still really high volume. But the demand pushing it up is starting to lessen a little bit. The danger here is that when this is finished going up, and it will eventually finish going up, it will probably come back really hard. And the reason it will is because when you see this volume, obviously the herd are buying. The smart money don't buy like this. So the herd are buying, so there must be some really good news. And the question people don't ask is, well, who's selling to them? Who's satisfying that demand from the herd? There's only one group that can satisfy that sort of demand, and that's the professional money on the market. Because there's no trapped holders back here, no resistance lines back here that they're absorbing. It's all fresh new ground. So who's supplying? Where are the shares coming from? Where are people? Who are the people buying the shares off? They're buying them off smart money, and they will be falling over each other to supply this demand. It's Christmas time for them. And what happens if the demand is high enough, they'll support the move up, but they'll be selling as they do it. And that looks like what they've been doing. That looks like what's happened there in the last couple of days at least, but they'll be selling on the way up because they know that demand from the herd can't be sustained because it's relying on fresh new buyers coming in. And once the herd are bought in, they become holders. And then holders don't contribute to the price. And when you're holding, you don't contribute any further to the price. So smart money have to sell into this demand while it's there. And it looks like there's a lot there. And then what happens if when the demand finally does fall off, whatever smart money you've got left over goes on sale, and they come down really hard then, because no up move can be sustained unless the professional money are continually transacting and buying and contributing to the share price, feeding the share price up. They have to be continually buying to do that. Whereas a mum and dad investor, when they buy, they contribute to the share price once they buy, but then they become a holder and they don't contribute anymore to the share price. So that's a bit of a catch-22 there, because the guys you need to keep this going, which are the professional money on the market, are actually distributing in these bars. All these bars contain supply, selling. All high volume bars contain selling, but somebody has to be satisfying the demand from the herd as they're going up. And but how far can it go? Who knows? But what you can look out for, well, your demand is lessening, so that's technically a no demand, but it's still very high volume. But you'll find if it gaps now, and they'll gap it up to try and keep attracting new buyers into the stock. But if it gaps and closes on its bum on the low, and it's an up bar, and the volume is quite hot, or even if it's really low, then that will probably mark your top, because they gap it when they'll gap it if they see its demand's coming off, and they'll do that one last squeeze to get every last bit distributed, every last cent of demand they can. And so that's why you've got to be careful buying now. If you're buying now, it's very dangerous, because any one of these bars could be a buying climax on the day. You just don't know. So that could be the last one that goes up, and then it'll come back. And you probably, if you're going to see where it comes back to, you'd probably mark the tops. I'd probably mark the 43 cents there, but even 26 cents. Just mark the highs and lows of these bars, and just see where it supports. And what you want to see is these little buddies here, really light volume down bars, coming onto one of these areas of support, which will be the high and low of that bar, or the high and low of that high volume bar. But I think this will come off pretty hard once they've finished. I mean, who knows? But I wouldn't be. There's no long entry. There's no way you can go safely long here until it all calms down, and then we'll see where it gets to then. So anyway, that's VRX. This is TRH Transit Holdings. I actually charted this last weekend, I think, and it was that bar there, and we're saying, oh, yep, that's a really nice breakout. We wanted to see that breakout tested, but it never got tested. It just kept going, and that happens. So unfortunately, it just but I say it's better to miss out than to be taken out, because these bars here were all weak bars. There's supply coming in there, closing off the low, and then a high volume up thrust, followed by no demand, and that should have, and then you've got another up thrust. They're all weak bars, and then this bar was that newsletter, that really big one, which shall remain named. Oh well, it's the D&D newsletter. It said, oh, this is really good. So they said it was really good. Look at that volume. And look at what the price did on volume. It gaps up, but it closes on the low. So that can't be all buying then, I mean, obviously there's a lot of buying, but it's herd buying from that announcement, or from that newsletter. And but it's closed on its low. I mean, if smart money were participating in this up move, how could it close on its low? It's because they're distributing into that demand. I mean, and they were distributing before then. These were all weak bars here. They were already distributing, and then this happens. And they must have thought all their Christmases come at once, and that will come off. It might take a while because they're a big newsletter. But unless there's some sort of follow-up announcement that comes through, they all come off, all these things. Even I think I've only seen one where it kept going up, and that's because it had a really, really good announcement the next day. But even then, it still came off. It went really high and then came right off again, and that'll do the same. That's a big, because that's not just a big entry there. That's a big exit. That's being, somebody is supplying that demand, and the only people who can supply that demand, who have the holdings to supply that demand, are the smart money on the market, who are actually the ones you need to move the price up, to keep a sustained up move going. And the catch-22 of this is that they're selling in that bar, and that will eventually fall. And what we want to see then is where that falls to. And I would say they'll probably at least try and test this bar if they're bullish. But they were selling even there, so it's hard to say. They could even come right down to there, maybe. I don't know. Eventually, it might take a while, but I think eventually it will come back to that area. But I think if you have a look at, have a look at these really low volume down bars. There's an entry there. There's a low supply bar, really light volume, and a confirmation on the next bar on slightly more volume, and boom. That's what you're looking for on top of one of these high supply areas. So where's another example? You're seeing really light volume down bar followed by confirmation. There was one there. Could have got out in your weak bars. I think now you're in fresh new ground now. See, there's no trapped holders here selling. Well, there might be someone. Go back 500 bars. No, you're on fresh new ground. So there's no trapped holders to the left. You've cleared that whole area. So that's smart money selling that, and that will have to come back. Once this demand has run out, that will fall back, and then we'll just have to see where it falls to. So don't feel like you're missing out, or that you have to jump in there and get it straight away, because that's going to come back. I'm 99% sure that has to come back, and then we'll see where it tests. We want to see these narrow spread, really light volume down bars coming through. But anyway, if it did want to keep going up, then look for testing coming back onto it, because let's just say it does keep wanting to go up, then look for the tests come back on. Buy the dips, don't chase the while it's in the middle of marking up, because that looks like you don't know where they're selling it off in the top, and that's a big sell-off. That's gonna affect the price for a long time. That single bar there will affect the price. It'll have a say in what happens in the history of this stock for a long time. Much like these ones here. See these really high volume up bars? Except these were really widespread. This one's really, really narrow, so it's really all those. It means every buy order's being satisfied with a sell order, and that's a very weak bar. That's a that's like a buying climax, and that's a very weak. And it's very weak. The sort of bars you're short. If you then see up thrusting and no demand, like up bars that are on very light volume after that, and up thrusts after that, you'd be shorting. If you could short the stock, you'd be shorting. And when we're looking for shorts on the intraday, on BHP or on the 3-minute chart, that would be a present for a short. It's not as liquid, so these things can move around a bit anyway, but I'm just saying that's a weak bar and you need to be careful. I think they'll come back and then we'll see where it tests and see if we have an entry. But that could come. The exit is so huge, and that is a big exit. It's a big entry by the herd, but it's a big exit by smart money, that it could come right back even to the breakout line here eventually. So, but anyway, enough said on that. I go on to the next one. Okay, this is NEN, Neon Energy. We can probably put a, well, it's breaking its trend channel, isn't it? Trend line. We can probably put one on there. I'll even turn it into a channel and put a center line on it. That kind of works. So we can look at the bottom of the trend channel there and the center line anyway. So here's a really big buying climax up the top here. So we'll mark the top of that bar as major resistance at 47 cents. And we've got the low of that bar at what's that, 39.5. So it's actually hasn't quite made it there, has it? Nearly. We'll just zoom in and see what's happened. So it's obviously gone into a bit of a downtrend, shorter term. It's gotten away from it a little bit, so that's a good thing. We can probably let's get rid of that one. And probably put a little one in here, like from there to there. That's a bit steep, but anyway, we'll leave it there. Okay, so it's come off. There's a really high volume bar there, which is pretty close to the other one over here. When the price collapsed on August, what's that, August 5, when the market went down. I'll just zoom in there. High volume comes in and it closes off the low, so the market's tried to support it, but supply has overcome demand and it's gone lower. But smart money have stepped in then. That's a really high volume down bar, ultra high volume, and they've supported the market. And the next bar closes up after going down initially. So there must be buying in the bottom of the market there for it to do that, and then it's gone up. So we can probably mark the top of that bar there as a major, as a line to watch. So it's got up above there. We see a nice test and confirmation. Really light volume down bar test bar. There's a couple of them actually. That's probably not really a good test, but that one is. Next bar closes up on slightly more volume. You could have taken an entry there and targeted the resistance line. That's a really high volume up bar, and that's been sold. And it's got similar volume to these bars down here, so that's been sold into there. It's hit supply there, and that's knocked it sideways again. So we need to mark the top of that bar, probably, I'd say, as a major resistance. It's come off, but we've got low supply. We've got high supply here. It's a lot of buying coming in there, but there's also a lot of selling, so it's high supply. And we've got low supply where we previously had high supply, so no selling in that area. And then it's gone up on increasing volume, good. Then when it's hit the supply line from the left. The spread's narrowed, it's up thrust a little bit, and then come off. But it's come off on lighter volume, but it's a wide spread, so they've let it drop. So it's not ready to go up there. But what we're looking for now is one of these again, these really narrow spread down bars in this area. If they give it to us, the confirmation bar, which is the next bar going up, then you can do the same, rinse and repeat. Take the entry and target the resistance line. But what they'd really love to do is probably try and break it back into here if they can on any bad news. But there's no supply around that level now, so there's no selling around that level where there was before. So you got to say that's a bit of background strength there. Even when they took it up, they came back and tested. See the lightest volume and 3 bars tested. It's gone up. Then they've sold it down, but there's nothing. They'll always bring it back to test an area of supply because they don't want to have to absorb that supply at higher prices. So they'll bring it back and test to make sure it's gone if they're bullish. And so that's a really nice test and confirmation. You could have bought there and you could have targeted the resistance line for a short-term trade. For the longer term, you probably are really looking for it to get above that 40 cents at least, and then come back and test, and then you probably get a good longer term entry. But at the moment you've got a lot of background weakness here, so you've got resistance right above you. That's what makes it a little bit awkward here. You've got a lot of weak bars, really high volume bars, and these strong bars here don't have the same volume on them as your weak bars at the top. Smart money sell on up bars, and you see that's an up bar. News is really good, even that one. But look where it's on really high volume, but look where they close. So it's sold into and it's come off. You can't sustain an up move unless smart money are supporting the price, and when they sell, when they distribute, it then comes off to where they're bullish again, and looks like they bought there, and they're probably buying there sometime. Look over here, this area here, they'd spent time accumulating before, and that might have to spend a bit of time going sideways in an accumulation range before it can go up again. But we'll just have to see. But you could almost argue that this is still in a downtrending channel. I take those and put a channel on it. I'll see, there you go. I mean, because you've got your high, you've got your lower highs and lower low there. So, and you've got some weak bars, but your high volume bars, your really high volume bars are above the price. So you've got background strength at the bottom, but not quite as strong or weak as the weak bars are weak at the top. So you really want to get at least probably above the 40 cents, get above the lows of these bars and then retest them to really break the back of the downtrend. But anyway, yep, no, that's me done.